Good morning traders, and welcome to this Orbex Market Insights update for September 31st for the FX majors with me, James Harte, looking at the pound dollar and the dollar yen. So in terms of the fundamental backdrop for the pound dollar, there are quite a few important developments to note recently. We heard a shift in tone from the Bank of England last week, with one key policymaker noting that the bank could be forced to cut rates to help buffer the economy, even if the government is able to secure a Brexit deal. Furthermore, should Article 50 be extended once again, the Bank of England could even be forced to cut rates ahead of Brexit to manage the downside impact from extended uncertainty. On the data front then, GDP data released yesterday added weight to this message, with the UK economy shown to have contracted 0.2% in the second quarter. As such, the UK is now at risk of entering a technical recession should the third quarter reading print in negative territory also. For the dollar yen then, it continues to be driven by fluctuating US rate hike expectations and risk flows. Market expectations for a further Fed rate cut this year have been lengthened, with traders now looking beyond October to December as the next likely date for a rate cut. The Japanese yen has seen reduced safe haven inflows recently, given the cautious optimism being displayed ahead of the next scheduled round of US-China trade talks due to take place on the 10th of October. However, there are two-way risks here, and any breakdown in talks will be sharply bullish for JPY, given its safe haven status. Okay, so let's take a look at some technicals now then, and please remember that opinions shared here do not constitute investment advice, and when trading, losses can exceed profits. So, starting with the pound dollar on the daily chart then, and you can see that price recently pierced above that 124.85 level. We came close to testing the bear channel top running from year-to-date highs. However, you can see that price reversed sharply from that point, trading all the way back down to test the 122.87 level, which is holding as support for now. You can see we had those previous highs there, creating resistance. We've broken above them, retesting, and for now they are holding. So in the short term, while price is still sitting above the 122.87 level, we could see a further rotation higher. Again, that 124.85 level and the bear channel top remain the key topside markers to watch. In line with this bearish channel then, the focus is on a likely move lower, however, with the 119.94 level standing out as the key downside target. We drop down onto the H4 charts then, and you can see that in that rally above the 124.85 level, the RSI indicator was flagging up heavy bearish divergence, highlighting the corrective nature of this move as opposed to it being the start of a new trend. So again, for now, the risks appear skewed to the downside, and the key level to watch is this 122.87 level. If that breaks, that could pave the way for a deeper move down to test 119.94. Moving on then and looking at the dollar yen on the daily chart. And you can see that the first big things to point out on this chart are that we are potentially creating a large double bottom pattern into this 104.98 level. You can see we recently tested that level, pierced below it slightly before reversing sharply, and we're now trading back to the top side. Price has recently broken through the bearish trend line running from the April highs. And if we look at the recent price action, you can see that we've got an interesting formation here, because what we could be looking at is an inverse head and shoulders pattern setting up. So if we go ahead and add in the 107.09 level support, you can see that we have the left shoulder here, the head, and then potentially a right shoulder forming around this point. So that could pave the way for a much higher move in dollar yen over the medium term. And again, this 108.83 level is going to be the key topside level to watch in terms of confirming a bullish move. If we drop down to the H4 charts then, and you can see that the risk to this view is that price is potentially creating a lower high against that recent peak. So if price does stall here and reverse lower, the level to watch to the downside will be this 107.09 level. If price can hold a retest of this level and find buyers, then that will keep focus on a further push to the top side, again targeting 108.83 in the short term. However, if price does break down below that 107.09 level, that paves the way for a deeper move down to test support at 104.98. Okay, those are the levels I'm looking at in the pound dollar and the dollar yen over today and the rest of the week. Remember to stay tuned into the blog each day where we'll keep you updated with all important market developments. And remember, of course, that we have the US employment reports on Friday, which could prove to be very volatile for the market indeed. Okay, thanks a lot, everyone. Good luck with your trading.